Hello traders, this is Luca here from ACY Securities, Technical Market Analyst, and today we're going to be discussing about central banks and what gonna happen in the next month when more than 2 central banks will be releasing the interest rates. Are they gonna be dovish? Are they gonna be hawkish? That's what we're gonna be discussing today. So let's have a look on what I got. Alright guys, let's just start with US. Right, everyone knows that we have the Federal Reserve, and the Federal Reserve do the FOMC. FOMC, it's the Federal Open Market Committee, right? It's there where the chairs, where the representatives of the Fed discuss what's going to happen with the monetary policy. And the monetary policy have a huge impact on the currency as well in the economy. Are they, gonna raise rates? Are they pause rates, or gonna they cut rates? For those who don't know, right now US have a current rate at 5%, meaning that the interest rate on US is 5%. So, all of those 25 base points, 50 base points, they pausing, they refer into the current rate. So if they're hawkish, they're going to be raising interest rates. Hawkish mean trying to keep inflation down maximum as possible and trying to get all the products that it's, normal people as us are buying on the supermarket, are using services and so on, trying to get those inflations down. And for that, one of the tools that the Fed use, it is a very, very strong tool, is raising interest rates. So then when they raise interest rates, they basically trying to cool off the economy, all right? So right now on US, the Fed is on current rate of 5%. The last move they did was a 25 base points, right? Meaning 0.25% increase. And the last move was made on the 22nd of March last month. All right. So now let me talk a little bit about the ECB, all right? The European Central Bank. On the European Central Bank, what we have, it's basically the opposite, right? So we have a bit less current rate. So on US, we have a 5% current rate. And on ECB, on Europe, we have a current rate of 3.5%, right? And it's basically the same thing. The Europe Central Bank, they do the meetings and they discuss which would be a better rate, or if there's going to be better to just pause, or it's going to be better to cut rates for the economy. How they measure it is the same as the Fed and same as the all central banks around the world. RBA, RBNZ, they use all the same indicators. Are the inflation getting down? No, so then we have to raise interest rates. Are the inflation going up in huge paces, that you haven't seen it in ages? Then we have to increase interest rates, all right? So the last move for ECB was at 16th of March last month, and it was a 50 base points. 50 base points is 0.5%, all right? It's half of 1%. So before it was 3%, and then on the 16th of March, they raised it to 3.5%. All right, so what does it have with the market? What does it implies into currencies? What the rate implies into euro, and what the US Fed rate implies to USD. All right, so first, when the interest rate is going up, this is good for the currency, all right? Why? There is a few reasons, and one of the best reasons to describe it, I'm gonna draw it up an example here. Think as you an investor, as you a trader, you have $100 million, let's say, okay? And you want to invest your money, right? But you want to be a little bit safe. So you want to put on interest rates of some country that has it's paying a good interest on your bank account or something like that, right? And then you have your options. Your options is going to be US, it's going to be Australia, it's going to be Europe, Swiss, and so on. We have plenty of options, right? But which one has a bigger interest rate that's going to pay you more? This is what you want as an investor. You want low risk and you want more profits, basically, right? Well, certainly not Europe, right? Because Europe has a 3.5% interest rates and US has a 5% interest rates. So it's sort of a simple, right? Okay, well, I have 100 million, I would put on US 5%. I'm not, I have my options. But if I told you that it's not that simple, why it's not that simple? It's basically Europe has a much more probability to continue hiking than US. Okay, so what's happening here? All right, remember when I told you that a higher inflation means that the central bank have to put the interest rates even higher. So Europe, it's a very, very good example. This is why I brought here Europe and US, and I'm trying to put in comparison. And then on the end, I'm going to sort of give you a trade idea, a trade opportunity, okay? That in my personal take, it's one of the best risk appetite right now on the market. Okay, coming back here. So ECB has only 3.5 and US has 5%. Of course, I'm going to put my money on US. Well, it's not like that. First of all, when inflation is going up, they have to raise interest rates. What's happening on US? Inflation is slowly coming down. It's slowly coming down, all right? So we have a 5% inflation rate right now on US. And we have a 6.9% inflation rate on Europe. So now Europe has more chances to continue hiking over US. So ECB has more opportunity and has more room to hike interest rates because they have a higher inflation than US. That is coming down, inflation is coming down on US, as we can see on the releases of the news, and they have less room to hike. So now Europe has two opportunities. Keep in 3.5%, so they pause for a period of time. They watch inflation. Is inflation going down now or is inflation continue to go up on Europe? And then they take decisions, right? That would be very smart to do, in my opinion. But now we have US. US, as mentioned before, have a 5% inflation rate. And it's coming down slowly, slowly, slowly. So they don't need to raise rates anymore. They don't have, they don't have reasons for that. Raising rates, it's very harmful. It hurts a lot the economy, but it's good for currency. It gives a currency a lot of strength because it's going to have more money coming into the country. They want more US dollars. Investors are looking for more US dollars. And what's happening here? Investors are looking for more euros right now over US dollars. So meaning that all the money that was going to US is coming back and going to Europe, right? Meaning that we're going to have a stronger euro. And meaning that we can have a long opportunity on euro dollar, right? So this is called differential rate swaps, okay? Differential rate swaps. Differential rate swaps is basically what I've explained to you guys. Who has more opportunity to keep hiking and who is already on the end of the hiking period and they're going to be doing a pivot. When they pivot, they become dovish when they were hawkish, and they become dovish and they become hawkish when they were dovish. This is basically it, okay? Now, I want to talk a bit of out of context, but I think it would be very nice to bring it to us about Australia, right? So we have Australia on us, and I think Australia, it's a very good opportunity as well that we can back it up with other currencies, even US dollar, I'm going to give an example here, but I want you guys put an example on the comments as well for me on what you've learned today, sort of differential rate swaps, basically. which opportunity would you take on AUD? Are you looking to longs or are you looking to shorts? All right, I'm going to explain my view here on AUD and what's sort of happening on Australia right now. And then I want to hear your opinion on the comments. All right. So first of all, RBA, Reserve Bank of Australia, what they are doing, right? As everyone know, we had the minutes. What's the minutes? You know, oh, we have a minutes being released next week. It's going to be 2 o'clock. Oh, I don't know how to access those minutes. And the market's just moving crazy. What's the minutes? Minutes, it's basically what was discussed on the meeting. So it's the minutes of the meeting of RBA. Basically, it's, let's say me and you are talking here, you know, we are the chief economist of Australia. And we are discussing, now I think would be good to raise rates. I think would be good to raise 25 base points rates next month, and then we can pause, right? So we're sort of having a conversation. And there is someone seated just there typing everything that we're talking. Everything, every sentence, every little detail. And those minutes, basically it's called minutes, what we're talking here, will be released after or in the day that the RBA releases the interest rate decision. See? So sometimes you see like, okay, so, but they raised a lot. They raised 50 base points, but the market kept going down. What's happening is basically that the minutes wasn't that good as they are raising. Maybe they are raising because they need, and they don't want the inflation and, you know, the economy to be very bad in the next months or so, and they have to raise. But they plan to stop, or maybe they plan to cut rates in the few months. And they are talking about these, and the person they are noting everything. So then when it's released, investors look at to AUD like, okay, they raised, but it's not that good because they may be going to pause in a few months. So I'm not going to put my money there. I want to put my money in Europe because the minutes there, they're saying that they have to raise, they will continue to raise, and yeah, I think my 100 millions would be much better allocated on Europe over Australia. So this is why, now this is just a joke, but this is what basically happens on real world, to be honest. Okay, so what's happening on RBA? RBA has a current rate, Australia has a current rate of 3.6%, okay? And the last move have occurred on the 4th of this month, April. And the last move was 0 base points, meaning that they paused 0 base points. And if you go to your chart right now into the day of 4 this month of April, 4th of April 2023, and put it in a 15 minutes chart or put it in a 5 minutes chart, okay? Waiting for you to do that. Cool, you there? Awesome. Okay, so now have a look at what happened on AUD USD or AUD NZD or AUD CHF, any base AUD first and then something else. I bet you it's going to have a massive drop. Why? Because they didn't raise anything and the minutes was dovish, meaning that they planning to stop for a while. Now, if we do the opposite, if we have the AUD on the quote currency, if you go into the chart in the same day, we're going to have a look that the market's going up. Why? Because the base currency is strengthening. And when the base currency is stronger than the quote currency, we have an up move. When the quote currency is stronger than the base currency, we have a down move. Okay? All right, so back to RBA. So as I told you, they didn't raise, so they paused. But there is a very, very tricky thing here. When they, on that day, 4th of April 2023, on the minutes, you can have a look at that. It's very easy to have on your hands on the minutes. Basically, you type it on Google, RBA interest rate decision minutes. And the first website, Reserve Bank Australia, as soon as you click it, will come up the minutes and you can have a read by yourself. But I'm here, this is my job. I'm going to resume everything and give it to you. Basically, they say that they thought about raising 25 basis points, but they didn't. Because inflation is still high and credit is still tight. Meaning that if there is no credit there, there's no need to raise interest rate. And if there is continue to have inflation sort of at the same level but trying to come down, no need to raise interest rates. And if they raised more, they would hurt the economy. So the decision was pause for a while and then we see what's going to happen later. All right, so this is basically what happened. And right now for me, RBA is being dovish, meaning that they are going down on the path, right? But maybe it can change later on. Coming back to euro dollar, just a final release here, what I want to say, everything. My opinion, my personal opinion, is that we can have more opportunities on the long side of the market than the short side of the market on euro dollar specifically. Okay, why is that? Because USD is being much more dovish and ECB is being much more hawkish. Okay, so in that case, I stick for my long positions until 1.125, and that's it, guys. I think, if you have any questions, please comments down below and I would be more happy to answer anything. All right, that's all for today and I see you in the next video.